Good morning, everyone, and welcome to the European crossover webinar. And we just get the German data. Let me see. It hasn't actually come out yet. Okay, here it comes. I thought it was coming. We do have Eurozone money supply numbers, loans to households. IFO business climate came in at 90.5, Reuters polls for 89.3. We're waiting for current conditions as well as expectations. So 84.5 on current conditions and expectations, and which is pretty much in line on current conditions. Nothing yet. All expectations just came out a little bit better at 97 versus 93.7. We did get Eurozone money growth just now. Now, coming into the States, we will have jobless rate, Mexican data at 7 a.m. Eastern. And then at 8:30 Eastern, we will have durable goods. And at 10:30 Eastern, we'll have Dallas Fed Manufacturing Index. Now, obviously, we've had a pretty big mover here with gold. And you can see the big jump that we've had here in gold market. That is just really zoomed here. Actually, looking at 5 minutes, take a little bit out of context here, but has zoomed nonetheless. Let me go and pull up the 2 hour. And these are new all-time highs for gold. Boy, look at that run. Just a phenomenal run here. And we're still looking pretty strong up here. We did have a little bit of a doji here. Well, we're still holding up well. And we can go in and take a look with equities. We're starting to see the Nasdaq just move up a little bit. We were actually up a little bit higher earlier in the Asian session, and you saw this dip back here, and they made this run here eventually down here to the 508 area here. Ended up going to sleep before we came down to here, but we did. They made another run back up here, and then came down here to same day VWAP, challenging down here at almost 500. But just marking time. Now, we did have a pretty good sell-off last week. You can see that, and we actually end up here holding the VWAP from the June 15th lows down here. Actually, it's about right there. Down here, and we ended up holding those lows here. Tried to work a little bit higher. We'd have to get above 10,534, but obviously, like I said, we saw a pretty good sell-off after that run up in here, but we do have some data coming out, not data, but earnings reports that'll be coming out this week. This can be Google, Apple, and Amazon are reporting after the market on Thursday. That was from Chris Weston, and it says with others, we see 36% of the NAS index weight it reporting in that period. Consider the implied one-day move. It remains is going to be 5%, 4.3%, and 6.4% respectively, which would be put some punchy moves into the futures market. And that was from Chris Weston. And so we're certainly looking for the potential for this market to really swing quite a bit here. And I'll take a look at the SPOOs. Here we are on the 2-hour chart. And for them, they're going to have to go on and get back up above 32.27 to really get things clipping along here. But Nasdaq will really be moving along this week with reporting coming out, and that is going to be some huge potential moves throughout the week. And let's go on and just go and take care of the news quickly before we move into analysis. So the dollar squashed as Fed seeing softening inflation stance. The dollar crumbled on Monday as cracks in the U.S. economy recovery drove investors away from the world's reserve currency, as increased bets the Federal Reserve could flag another accommodative shift in its outlook this week. And that's going to be key. Had also made a note here in regards to that. That came from Trading Audio. The U.S. bond market eyeing record low yields set for nudge from the Federal Reserve. Wall Street strategists expect Fed Chair Jerome Powell to send a sufficiently dovish message after the central bank's July 28-29 meeting to sustain downward pressure on yields. And that probably may be giving us a lift, not only in gold, but it's also weakening the dollar, and we'll get to that. The greenback fell to a 4-month low against the yen, a new 22-month trough on the euro, and a 5-year low against the Swiss franc, while gold minted a record high. The Fed meets Tuesday and Wednesday after labor data last week showed the U.S. employment recovery wobbling. No major announcements are anticipated, but analysts expect policymakers may begin laying the groundwork for more action in September or the fourth quarter. The U.S. Central Bank could firm recent hints about the benefits of an average inflation target, which would allow rates to stay lower for longer. I think we're seeing the U.S. dollar adjusting to that, said Chris Weston, head of research at Melbourne, brokerage from Pepperstone. If they are ever to get inflation, then the reaction is to allow the economy to run hot for a large period of time, he said. So the chance of the Fed raising the next 5 years is being repriced in the U.S. dollar. There's a minimum trade as the people runs this short position into the Fed meeting. The value of the short dollar positions hit its highest in near 2 years, while the futures market is pricing negative. The euro rose 0.5, and the Antipodean currencies gained by the same margin. The pound was last at 28.42. Market sentiment is being clouded by concerns over the global recovery as coronavirus cases spike and geopolitical tensions worsen. None of the majors made much headway on the yen and the yuan. A barometer of Sino-U.S. relations struggled to capitalize on the dollar weakness. China said it had taken over the premises of the U.S. consulate in Chengdu on Monday after ordering the facility shut in retaliation for being ousted from its consulate in Houston. Elsewhere, investors are also beginning to fret about the U.S. political deadlock over the next round of fiscal stimulus, with a month-end deadline looming to extend some employment benefits. The White House and Senate Republicans agreed to a $1 trillion relief package, but that must be negotiated with Democrats who've been pushing for bigger spending. Last week, a recovery in the U.S. jobless market unexpectedly stalled, while Purchasing Manager surveys showed Europe's recovery pulling ahead, adding to the nerves about any let-up in U.S. stimulus. Failure to pass additional fiscal measures or a minimalist bill will likely generate a sufficient shock to markets, said Stephen Englander, head of G10 FX research at Standard Charter in New York. We expect a big stimulus package that probably will reflect Democratic priorities on income, support, and spending. And to the big story of the day, or one of them. I'm doggone, I knocked this story off. I had it open. Hold on. There we go. Precious gold soars to an all-time high as dollar dive and boost safety rush. The gold surged to record highs on Monday as an intensifying U.S.-China row and weaker dollar sent investors scurrying to the safety of the bullion hedge against the risk of the global economy already reeling from the COVID-19 pandemic. Spot gold rose to $19.31 per ounce and hitting a record of $19.43 in the U.S. futures market. Silver to join the rally, jumping more than 6% to 24.36, its highest since September 2013. Gold is in a perfect condition to move higher, said ANZ commodity strategist Soni Kumari. Amid the virus and central banks pushing for liquidity, further support is also coming from falling yields, weaker dollar, and geopolitical tensions between the U.S. and China. The safe haven demand for gold has been rising, while there is none for the U.S. dollar anymore. And you can see here, big push here in gold, and silver soars to 7-year high on gold's coattails. The dollar fell to a near 2-year low, and increased bets the U.S. Federal Reserve could flag another accommodative policy shift when it meets this week, implying lower interest rates for longer. China seized the U.S. consulate in Chengdu, retaliating to the closure of its consulate in Houston. Meanwhile, COVID-19 cases surged to over 16.13 million globally, driving expectations of more stimulus to stem the economic blow. As long as this virus situation gets worse, the market is discounting more stimulus for a longer period of time and bigger quantities, said Edward Martin, analyst at ED and F Man Capital Markets. Non-yielding gold is considered a hedge against inflation and currency debasement, with analysts also pointing to the massive inflows into the gold exchange traded fund as a driver behind its 28% rally in 2020. However, strong developments on COVID, vaccine front and easing have seen U.S. tensions and prompt a correction. So, bear with me. So with that, let's go on and move into the analysis. So let's go move into the euro. And we did see one heck of a move here. And even extending that move up here to the 17. I did post a chart. Pretty much we were close to these highs, indicating this resistance here at 17.14. We've since backed off a bit here. Here's on the daily chart, but the euro finished at the highest of the week with a 22-month move. Resistance is going to be at 16.58, followed by 17.47. Well, it was very challenging, Kim, with this 17.14 area here. Potentially, we could still move to 1747, and we'll go and list that since we've already jumped past the 1658. So we'll have 1748 here. And support will be 1593. Well, that's going to be a ways down here. Let's go on and move into a 2-hour chart. So looking for support here. We'll be looking for a move down here to 1653. And let's go and take a look here with the cable. So cable cable closed at the highs of the week just below 128. Major resistance is going to be 28.78. You can see that coming right across here. We'll pull that back. So major resistance here at 28.78, preceded by an earlier June high, which would be 28.13. So, but 28.78 is looking like potentially we could go on and get there. And certainly we start out strong for the week. So we're going to have 28.78. And support we had for 26.25, but we'll have to go and move that higher. Well, so in the 2-hour chart, we'll be looking for support here would be already kind of taking a dip down here, challenge this area here. We'll just go with the high right there, which is going to be 28.02. Does seem a bit ambitious. Let's just go right there, which is going to be just even right there. Just call it 27.89. And let's go and move on to the Aussie dollar. So the Aussie posted a gravestone doji on Wednesday, paring back a bit, but the pair remains bullish with immediate resistance at 71.40 with support at 70.16. Well, you can see here we've come right up here just about to the 71.40 right now. There it is at 71.40. Right there. So we're going to go on and go with that. We'll go with the 71.40. Actually, had 71.42 from Friday. We can go and keep that there. The pair remains bullish with immediate resistance there and support at 70.16. And let's go on and move on to the Kiwi. So the Kiwi possibly has posted a tweezer top. You can see here. The pair remains bullish though, but after such a stretch, a pause is certainly warranted. Resistance will be 66.64. Looks like we've already pressed up against this here. You can see that right there. With support at 65.79. And that level right there, it's actually, I meant to say 66.74. Bear with me. So right here at 66.74 for resistance. And support is going to be 65.79. We'll move into the dollar CAD. So the dollar CAD remains under pressure, but is attempting to hold just above this 133 area here. Support is going to be 33.40 with resistance at 34.81. So trying to hold this area here, this 33.40. They're all trying to hold overall, trying to kind of make a stand here just above 133, but immediate support is going to be 33.40. With resistance at 34.81. So we're still, like I said, you can see here, potentially come back down to 33.40 with the dollar under pressure. But if we can make this run up here, it's not going to come until 30.41. There's some immediate pressure right here, 34.34. Oh, we can go mark that off. But we'll go in and keep the 30.41. Well, let's go into the dollar peso. So the dollar peso finished the week on its closing low. Support to start the week will be 22.20. You can see we've already pushed just a hair below that. With a break of that, allowing for a test of 21.90, resistance will be 22.54. So you can see here we've already made a little bit of a press below that 22.20, but that support here and resistance is going to be 22.54. And on to the dollar yen. So the dollar yen broke key support at 647 to finish the week in poor technical shape. A close below 592, or even below 562, below 5 will allow a challenge of 452. Support is going to be 562, so we're already below support here at 562. Resistance at 658, so we're in pretty tough shape right now. So this is, we're going to go with support right here is this low right there, which is going to be 516. 516, we'll go with that. And resistance immediate is 569, but we're going to allow for if we were to get some kind of return move here in the dollar, we'll be right there at 610. And onto the dollar index. And we're very, very weak. You can see here, we've already tagged down here support, which was at 93.87. So the dollar index broke 95.19 and appears on its way to test 93.87, which it did in the Asian session, with a potential move to 93.39. Resistance is going to be 93.84. So I didn't mean 93.84, 95.84, but you can see here we've already challenged this 93.87. And potentially you can move down here to 93.39. You can see right here, this 93.39, 93.87. This will here, and then a little bit further back, you can see the significance here of the 93.89. We'll go right now with this 93.87, trying to hold above that for now. And looking at resistance, going to be 94.35. And that'll complete the majors, and we'll move into the cross rates. Okay, so the Kiwi yen sold off on Friday to tag the 70.07 area support level before recovering, which it did recover. The sustained rally may be in line for a pause. Resistance will be 71.08 with support at 69.90. And you can see here we've been relatively quiet today, but 69.90. 71.08 almost seems like a quite of a move back. We'll see if we see anything close on a 2-hour. This key zone, which comes in at 70.65, we'll go with that for right now. And with that, we'll move on to the euro yen. the euro yen broke lower on Friday to the support level of 22.88 before rebounding strongly to close slightly lower for the session. Resistance will be 24.33 with support at 23.17. Well, we've seen the yen strengthen. So let's go move this to the daily. There we go. So you can see how we rallied back quite strongly here on Friday. And just to recap that again, broke low on Friday to the support level of 22.88. See it right here. Before rebounding strongly to close slightly lower for the session. Resistance will be 24.33 with support at 23.17. Well, with the yen strengthening this morning, we're having a tougher time. So resistance will going to be the 24.01 here that we have. And a very key level here, 24.01. Look back here. And support is going to be 23.17. Moving on to the euro odd. So the euro odd closed the week on its highs, taking out resistance at 63.44. Resistance to start the week will be at 64.79. You can see that clearly. With support at 63.30. So 64.79. And support will be 63.30. You can see if there's anything closer on a 2-hour chart. There is some support here, but we are holding steady. I guess for today we can hold it right here at 63.62, 63.62. And on to the Euro Kiwi. So the Euro Kiwi closed at its highs for the week, taking out resistance at 74.45. Resistance will be 76.24. You can see that right there. With support at 74.45 coming in right there. And on to the Aussie yen. So the Aussie yen paired back in the last 2 days of the week, of the prior week, forming what could be also, well, let me see, that's on the Aussie yen, the double top, but I don't see that here. I think it may have used the data from the other one. When we had, and I think that was on the Kiwi yen, so I guess it must have saved it. I don't know why it would have done that. Sorry about that. But looking here, we did go in and see a good little sell-off, follow through on Friday, and we'll continue to go and remain weak here. Support you can see is holding right there, which is 74.95. Support would actually come in a little bit lower here. We've got some volume, which is going to be 74.64. And looking at resistance, we'll go and move into a 2-hour chart. That's going to be right there, 75.80. Overall, still remains bullish. And we'll move into the guppy. So the guppy rallied off the lows on Friday to return close to 136. Resistance will be 36.34. With support at 25.22. Well, they're having a difficult time with the yen strengthening this morning. So we'll take a look at the 2-hour chart, see if we see something a little bit closer. And right there's going to be resistance. 35.72. And support we said would be 35.22. Well, we've already come down here. So support is actually going to be at these wicks. Actually a little bit lower here. $34.95. And lastly, with the sterling odd, So the sterling dollar closed the week close to its highs. The pairs rallied 300 pips off the lows this past week. Resistance will be 80.37, followed by 81.16. Support will be 79.46. You can see here we've already made making a good run towards that, but once again, resistance can be right there at 80.37. We've already actually tagged that this morning. We've paired back just a hair off of that. But that'll be resistance 80.37. And support is going to be 79.46. And once again, just taking a little bit closer look here with the euro. Here we go. And like I said, we've already challenged up here to the 1714. We backed off a little bit, but potentially we could go on and make a run up here to the 1747. And you can see where this comes way back here. Take a little bit on a weekly. You can see right up in here the significance of the 1747. So we could still make a run for that. Don't forget, like I said, with the Fed, and they may be laying the groundwork for a little bit easier move. So we may still see this market tag and get above the 1747 before pairing back. So you can see the significance. And actually, there's even a little bit higher move up in here, which comes in around 1771. So we can still make a move before the Fed's, completes or at the time they finishes their meeting. So just be aware of that. And that'll take care of the bias chart, take care of the webinar. And thanks for joining us here. And thanks for joining us here on the European Process webinar. And let's see. Yeah, Alexander was mentioning, shouldn't the cable have a 1 in front of it? We don't, well, because we already know about the big fix, so nothing changes. So just like when you're looking at in this case, the euro, we're not saying it's 1.1 or whatever. So yeah, that's true, but we look at the load for the remaining digits. We don't look at the big fig. So good remark nonetheless. And Mark asked about the Dow. We can quickly take a look at that. Well, if we can make a move up here, we're struggling with this 26,500, but we still have 26,600 right here. You see that coming right across here, just a hair above it. But I think we're kind of stuck in the middle right here, because on the downside, you can look further back. This is a pretty key area here, and that comes in at 26,178. Quite of a move lower, but right now we're trapped in this area, this little zone here. And I don't know. Like I said, I'm just primarily tracking the NAS, to a little extent the S&Ps, but I would let Monday play out. Mondays have been tricky. Last Monday, remember, the Nasdaq just went straight up, and really no pullbacks at all. But the ranges we're looking at right now is 26,342 up to right there, 26,509. So basically 150 pip trading range here in the Dow, within this little range here. But that's what we have. Thanks for joining us here on the European Crossover webinar.